Hello traders, Sid here with another video with another watch list. I'm sorry I couldn't post a video last week because I was too busy, but I'm back, so let's get started. So before jumping into this week's watch list, let's take a quick look at Nasdaq and S&P 500. Now it's clear that we are in a bear market as we are consistently making lower lows and lower highs. Now this sell-off reminds me of pandemic time when sellers were too aggressive, but now the situation is a little bit different because we are facing inflation, which is kind of like a man-made. Now today we saw a bull relief rally, but can you trust it? I don't think so, because bulls need to do a lot of work to break that downtrend and it may take a while. Now moving on to Nasdaq. So Nasdaq is clearly in a downtrending channel, as you guys can see here, and found a recent bottom at 11,738, from which it bounced recently. Now the candle formation is a bit intriguing if you pay close attention to these three candles over here. I'm on a daily time frame. Now the candle formation over here is called as a morning star formation. If you see this doji over here, it's called as a morning star doji, and it's considered as a reversal pattern. Now we need to wait for the confirmation. We need to see this bullish trend continuing towards the upside. Now till that happen, I would like to stay bearish. We might get a short-term bull rally in this case, and we can see 13,000 or 13,100 move where we see a strong support zone, and we might reject from that level and make another turn towards the downside. Now moving on to S&P 500. Story is not different over here. Okay, it's very similar to Nasdaq, but the bullish momentum for S&P 500 is a little bit stronger than Nasdaq. At least that's what we can see through the chart. Now it has exactly similar setup to Nasdaq, and I would like to see it holds this 4,000 level or move towards 4150 to 4250 to acknowledge this trend reversal. Now if you guys pay close attention to these three candles over here, as Nasdaq, I am again on the daily time frame, you see we came down, we have this doji and then a bullish candle. Now usually this pattern, as I said before, it's called as a morning star reversal pattern. This is a bullish pattern, but we need to see the continuation towards the upside. Also, if you guys can see here, we are forming this this left shoulder a head in formation. If that happens, then probably we will see another push higher towards around 4,300. At that point we might complete the neckline and then flush down again to form the right shoulder, and from that point onward we might move even higher, but that's just a speculation. Right now we just need some confirmation towards the upside. Stochastic is also turned bullish, but market can be irrational. We are in a different situation, so we just have to wait and see how price action developed over the next few days. Moving on to VIX, it is forming the rising wedge, and it is exactly at its trend line support right over here. It will eventually come down to the 20s, but it is highly possible that it might make another leg high within this channel and then break down. That means if that happens, if it moves higher, then we might see more selling in the stock market, as VIX is inversely related to the stock market. Okay, so that's about the market update. And now moving on to our weekly watch list. Now the first stock in the weekly watch list is app or advanced auto parts, and it has a double bear flag formation. This is the first time I'm witnessing this type of formation where you have this pole rising wedge formation or the parallel channel towards the upside, which is closely similar to rising wedge, breakdown, forming another pole, and now this is forming a flag. Look at the clean rejection from 215 level. So stochastic turned bullish right over here on the daily time frame. So we need to see if it can break above 220, okay, and fill the gaps toward 225. Otherwise, for the downside, 200 is the most closest and most probable target for advanced auto part to move. Moving on to AMD, despite having the awesome earnings, semiconductor sector is not getting that favor from the stock market, and it's constantly bleeding out. The technically it is forming the nice bear flag, and I would like to see if it can break above 100. Otherwise, can come down to lower 70s. As you guys can see here, we have a strong support towards 73. I would not like to see AMD at that level, but if it comes down to that level, then that provides an opportunity to buy it for a long term, because AMD is a good company. This is not a penny stock or the meme stock. It has solid fundamentals, good company, has good future. So at the $70 price, I guess it's a steal. Moving on to FedEx. Now the FedEx dropped recently after missing on their earnings per share by 1.33%, okay, and now it is forming this rising wedge, which you may also call it as a bear flag, because you can clearly see we have this pole and this flag formation over here. On top of that, it has a gap fill. If I zoom out a little bit, you can see we have this small gap fill between 187 to 183. Considering the formation, technical formation, and the overall market condition, I would not be surprised if we fill this gap pretty quickly. Moving on to Eli Lilly. Now Eli Lilly has a nice symmetrical triangle formation at the top, along with the tight consolidation towards this apex of the triangle. Now it looks bearish and could retest 283 to 73 level, which are marked over here. Now they recently reported their earnings and paid dividends, so I wouldn't be surprised if we see some profit taking, which might pull down this stock right towards 273, where it has good amount of support, okay, or you can say the previous resistance may turn into the support. So we just have to see how this price action developed over the next few days. Moving on to McDonald's. Now the consumer service is running hot on both sides, okay, either bullish or bearish. Now the most interesting thing that I like about McDonald's, as you guys can see here, is this inverse head and shoulder formation. It's also hanging within its demand zone. What I mean by that is, like, we bounce couple of times from this level. Also it was like a previous resistance turning into support for this bounce back. We broke down through that, but we pretty much bounced back through this level to the top, and now we are hanging within that zone again. So I would like to see a little bit consolidation and then breakouts toward 255 257, considering this head and shoulder formation will remain valid. Otherwise, on the downside, we have this 235 level, which can act as a strong support zone or a demand zone where buyers can step in to push it towards the upside. Moving on to ORLY. This is the stock that I usually don't cover in my watch list, but it has this nice bear flag, like a textbook bear flag formation. We gapped down with a huge gap to fill, and we are starting to form this rising wedge or flag formation. Now, considering we got a rejection from this key level, indicates that we might see a continuation towards the downside. Right now, what's the next target if it starts sliding down is $600. That's a strong level to watch for, and I think it will make a quick move towards there before bouncing back again, if it bounces back. Now moving on to Walmart, which is also a last stock in our watch list. So Walmart is one of the name that has been on the tear lately. It's a stock that favors inflationary situation. To be honest, it is doing extremely well. It is forming a nice head and shoulder, which is also a bearish sign, but before turning bearish, it might give us another leg high right towards this 150-151 level. It has a lot of support to the downside and upside as well. Yeah, as I said, like I can see it will retest 151 and make a U-turn to complete the right shoulder, and considering its formation, see it's just chopping between this zone of 151 to 134. So I wouldn't be surprised if it stayed within that range for a while. So that's it for this video, guys. I hope you like it. If you have any questions, then please drop them in the comment section below. I will address them personally. Also, keep this in mind that technical analysis is a visual thing, and the current market condition may or may not favor technical analysis, because market can be irrational for longer period of time. So thank you for watching this video, guys, and see you guys in next video. Take care. Good night. Bye.